In our opening call, we had warned the market might not be as interested in a pair of central bank decisions, which weren't going to have much of anything to offer in the way of new updates on the outlooks for monetary policy. And whatever updates we did get were actually somewhat supportive of the pound and euro after the BOE raised their Q3 GDP forecasts and Draghi sounded more hawkish than expected. In the opening call, we also suggested US CPI could end up being the volatility generator of the day, and this wasn't a letdown, with another soft inflation reading forcing dollar bulls to reconsider their exposure, especially after producer prices had already come in softer on Wednesday. Elsewhere, the Turkish lira made headlines, rallying some 5% against the buck and moving further away from recent record lows after the CBRT this time flexed its muscles and showed it wasn't going to play any games, hiking rates a dramatic, jaw-dropping 625 basis points, nearly doubling analyst expectations for a still very large 325 basis point hike. It will be interesting to see if this will do the trick and keep the lira from extending its slide. But overall, all of the price action on Thursday was risk supportive, and U.S. equities did not ignore racing back up and looking towards the recent record highs from late August. As we look ahead to Friday, we'll be wanting to see if the euro can hold up after poking above the Ichimoku cloud on that daily chart for the first time since it broke down below in April. Above the cloud means the euro is back in an uptrend, and this could open the door for a more significant repositioning in the days ahead that shifts the narrative back to those plus 3-year highs the euro was setting around 125.50 earlier this year. Looking at the Friday calendar, key standouts come in the form of China retail sales and industrial production, Eurozone trade, a BOE Carney appearance, and U.S. readings highlighted by retail sales, industrial production, business inventories, and Michigan sentiment. We also get another round of Fed speak. That's all for now.